Alright guys, right here we are back for the next video to explain and talk about our strategy. Okay, so we are going to talk about from where we stop. Alright, so we took these few trades while we were doing the other video and illustration. You can see the USD card that we took, and the USD sell limit is still pending, and the USD card is already in profit going. So look at this. Let's look at the chart. You can see the trade is approaching our TP, and at this point, on a normal ground of me trading, this is where I would want to take profit. I wouldn't want to wait until it hits the TP, but in case I'm not around, the TP is to secure my profit for me. So time to time while you're trading, if you have your stop loss in your TP, you might still have to look into your chart and see if there's a new market formation happening. All right, but in a long time, that this trade is going to hit TP and take our sell limit orders and went back on a reverse form. All right, so this video I want to talk about the reason why in particularly looking at this USD card, why I projected that it's still going to go bullish, and I also projected that I might have my sell limit above that my TP, so that if my TP is hit and price goes higher a little bit, I can take my sell limit order, and then the market can now reverse and I'll be on a sell market. So this is going to explain our simple moving average strategy. We call it simple moving average strategy. So I might not give the parameters on how to set that here. We'll do another video to explain how you can set your indicators and modify and customize your charts. That's a separate thing. So I want to talk about what you're seeing on my screen right here. All right, so we have two moving average. We want to talk about two moving average. These lines you're seeing here, the green one and the yellow one. Okay, and we have our stochastic on our indicator window. This is the main chart. This is an indicator window. We also have this red line that is going up and going down. It's simple. A stochastic that measures strength and price movement based on overbought and oversold. So I'm going to explain that in a bit, so pay attention right now. Now this trade you're seeing here, the 200 moving average. All right, the 200 moving average is the green one you're seeing here, the green line you're seeing here. It helps us to identify trends in the market. We have talked about trend line strategy before, and we have mentioned that trend line is a diagonal of support and resistance. All right, so the moving average is simple trend line, I should say. It's a simple trend line that shows to us the diagonal support and resistance, or acts as a diagonal support and resistance, which is our trend line. And what does trend line strategy talk about? When price get into trend line, and it's going to react when price get into trend line, and there are major and minor inner and outer trend line that you will draw based on a higher time frame and lower time frame, and you know which one price can likely react on that level. So we have this to be on a simple form, which is the moving average strategy, the 200 moving average and the 45 moving average. So the yellow lines you're seeing here is the 45 moving average. So the 45 moving average still shows and indicates us about trend. It shows us trend direction, and it also is a diagonal support and resistance level, like a trend line for us. Okay, so this is how we use these two moving average. Is used to take trades for entries, and also is used to find exit for trades in any instrument you're trading. If you're using it, I use it personally in synthetic indices. I use it even in gold trading. I use it in all currencies trading. Okay, it's only two currency paid that I slightly have set a certain and a different rule and how I apply it. it's only going to be based on time frame. Okay, something like GBP, JPY, and Europe JPY, the two pays. Using this moving average strategy, I base most entries and exit strategy based on 15-minute time frame, 30-minute time frame upward. But for every other pay, I can come to 5-minute time frame and then take some reasonable entries, and the same thing happens from 1 hour also. So take note, 1 hour time frame, it's also very 99%. Okay, not 90%. Yeah, not 99%. 90% of time on a 1 hour time frame, this strategy works a lot. The same thing with a 5-minute time frame, exclusively the two pay I just mentioned. The two pay I just mentioned react a lot within 15 minutes, 30 minutes up time frame. Okay, so let's get back to talk about the moving average. So we have the 200 moving average, and we have the 45 moving average, and we have the stochastic levels, the 80 level stochastic and the 20 level stochastics. Let's talk about how this is used in combination to form entry and to form exit. So first of all, the 200 moving average is used for trends. Okay, to identify a sell trend on a 200 moving average is simply looking at the charts. You'll find that every sell trend, the 200 moving average is above price. For you to identify a sell trend with using the 200 moving average, it must be above price. So that means that the candlesticks you're seeing here is the price we are talking about must have to form below the 200 moving average. So at every point price crosses the 200 moving average and get below it, it's going to form a downtrend. You can go back and forth and see what I'm talking about. The moment price crosses the 200 moving average and form a continuation pattern below the 200 moving average, is going to form a downtrend. All right, and the moment price crosses the 200 moving average and form price pattern above the 200 moving average, is going to be an uptrend in a matter of time. So these work within a lower time frame and also work within a higher time frame. And then we always recommend that if you're going to find an entry using the moving average, all right, you must have to allow price to come to the moving average. Like now we are having a sell trade. The trade has been selling, and I'm having a sell limit here, just a little bit above the moving average. The reason for that sell limit is because price has been selling all the way down and is doing a correction, which is a corrective movement, and is getting back to 200 moving average, exactly where the impulsive movement begins. So the moving average is now showing me that there is a retracement coming, and it's coming back to where I have my diagonal support and resistance. And you know what happens within the diagonal support and resistance? We have buyers and sellers sitting down there. All right, so now this trade has already been selling down and oversold. How do we know that the trade has oversold within this time frame? If you look at the stochastic here, the stochastics get into a lower level, which is the 20% level, and the 20% level of stochastics indicates an oversold area in a trade. It shows unwillingness to sell more on this pay. All right, and for that there's going to be a buyer stepping up, and also that indicates to us that there is a support level down there because price has oversold. Okay, so we find oversold level on a support level, and we find an overbought level on a resistance level, and I can see that price make movement from 20 level stochastic level up to 80 level stochastic level, which is an overbought area for us at the same time. So the 80 level of stochastics shows us an overbought area, and showing us as an overbought area, we have the moving average here also approaching the price. Okay, so the candlestick and the moving average are coming back together, and this is also where we find an entry for a sell, looking at price has been making a sell movement. So this is going to be a next a lower risk entry for a sell market, for a continuation for this sell market. So I only have to confirm one or two things before I can have this sell confirmation that the market is going to continue in the sell direction. One of them is currency strength. Okay, so I might not show the currency strength here in this video, but I will explain how it works. The currency strength, remember we talk about base currency and quote currency. Okay, so we're having USD CAD right now, and having this USD CAD now, for me to believe that this trade is still going to continue in selling after this retracement has been done, USD CAD must remain a weak currency and CAD must remain a strong currency. That simply means that the base currency has to be weak and the quote currency has to be strong for me to have another confirmation to continue in a selling of this USD CAD. Okay, but in case of I check my currency strength, USD CAD, USD is stronger than CAD. That is, the best currency is stronger than CAD. That means the trade still have potential to still even go higher before it can drop or even makes more higher and higher trend. Okay, because USD CAD is stronger than CAD in the base, so I'm expecting a more bullishness. But in case where this trade is making a reversal like this, and then USD is weaker, and already price is already at my 200 moving average, and then stochastics is showing me over both areas, and USD is remaining a weak currency. Therefore, I'm going to have to sell it off based on this strategy. All right, so those are the few confirmation we use in trading the moving average strategy, and basically what I've been doing a lot of times in trading. This is the basic strategy I use, aside using other trend lines and others with drawing lines and all of that, support and resistance, and marking this level. So this moving average is more effective when you're having some key level in the market. All right, so that is how it will be used. The same thing goes into the 45 moving average. So the 200 moving average is actually the lower risk. The 45 moving average is actually the highest risk. Higher risk in terms of taking profit and taking entries. Okay, so we use the 45 the same way we use 200, but we lower our risk when we want to use the 45, because the 200 is on a more confirmation level to us to use than using a 45. Okay, so like this trade, we already have known where to take profit, so the price is already roaming around our take profit, and we have nothing more or less to do than to take our profit and wait for more confirmation to take entry or so on the 15-minute time frame, we still have a little bit room for price to react on the 200 moving average. Okay, so my confirmation to this trade to either take profit or not is going to be based on if my currency USD is stronger than CAD. If it's stronger than CAD, then the space still have a tendency to go higher into this 15-minute time frame, 45 minutes, 15-minute time frame, 200 moving average. So but for my scalping strategy on a lower time frame, I can base this on 5 minutes. So on 5 minutes time frame, I'm already on a take profit. For me, I can get out from that trade and then wait for more confirmation if there's going to be a continuation pattern to push it upward, or I can sign up for the trade for now. So on a 15-minute time frame, we are still having the stochastic approaching 80%. all right, so that is just about that. So let's look into 1 hour. Okay, 1 hour is closed. So one of the strategy, or one of the things you have to note, is that when you're doing a scalping with this strategy, you find the closest 200 moving average, the closest to take profit or to find an entry. All right, so the closest for me right now is the 200 moving average on 5 minutes. So if I'm going to extend this trade a little bit more, I'm going to look into 15-minute time frame and hold the trade. Okay, and let me look at 1 hour. So 1 hour and 15 minutes, it's going to correlate a little bit. So 1 hour and 15 minutes, it's close. The two are close together. They are the closest after the 5 minutes. After the 5 minutes, 1 hour and 15 minutes is the closest. So I must still have to allow it to react. But in the case of this lower time frame, I can bypass some settings and allow it to reach into 1 hour. So anything happening within 1 hour 245 moving average is a conclusion for me. Anything happening within that time frame is a conclusion for me, because 1 hour sustain more than it does on a lower time frame, and also give you a more strong confirmation, because of the time frame is higher a little bit, and time frame there is an average of a lower time frame, an average of a higher time frame on an intraday trading. All right, so also if you look into this on a long term or a more longer term, you will see that the 45 moving average is still a little bit higher on 4 hours, and also on a 200 moving average is also a little bit higher on 4 hours. So this still have a potential to even retrace to a 200 moving average on a 4 hours time frame. But this is the reason why we base on 5 minutes, 1 hour, and other lower time frame, because prices react. Price cannot just start bullish and keep on going for the next 1 hour, 4 hours. Remember, we are taking profit, securing profit, because price will always go up, come down, go up, and come down. So if you allow your trade to run without knowing where to close some profit and re-enter a certain trade, you may be running a profitable trade for so long and end up not being profitable for you. All right, so that is why we use this strategy on a scalping manner, such that we can enter a trade, take profit. We know exactly that price getting to 200 moving average and 45 moving average is going to react either on a retracement or break and continuation. All right, so we take profit and wait it to drop if we see that there's a potential within the currency strength and the higher time frame, and we allow it to drop. We take another position in the same direction and go along with the market. Okay, so this is more I can explain, or this is how much I can explain right now, talking about the moving average strategy. And I also explain how we are using this stochastic in combination is simply identifying overbought and oversold areas. So at any time price get into 200 moving average, I have to look into my stochastic. Is it also indicating for me an overbought? So if I'm having my stochastics to be in the middle and price is approaching a 200 moving average, I have to patiently wait that, so that stochastic can also show to me that there's an overbought, coupled with the confirmation that price is also above the 200 moving average, like it's getting higher, approach the 200 moving average and it gets higher. I allowed it to show to me that there's an overbought in the market before I can short the market. All right, so we use this to either trade with the trend or trade against the trend, in the sense that I can use the stochastic, or you can also use the stochastic to identify a reversal in the market. Yes, to identify a reversal in the market, a quick reversal coming in the market, because first the 200 moving average is used to find entries and exit while you are trading with the trend. But if you want to trade opposite the trend, like here we are having a downtrend on this, it will be wrong that at this point where the market was here within this price, where the market was within this price, that you keep on selling even though the market is a selling market. No, you should be expecting a reversal at that point, because why? The market has already oversold. And why do we say the market has already oversold? We can see it on the 20 level of stochastic that the market has gone deep. And once you get that deep, it should be a correction from the movement that has been happening over the past few minutes or few days. All right, so at that point we will want to take a reversal trade against the trend, and that's going to be in a short form, because if you're trading against the trend and looking at the higher time frame, the trend might have a potential of an overall movement of a downtrend, and you're already at a certain support level and you're already on overbought on a lower time frame, and you want to take a reversal of that trend. So it's going to be it's going to be a short-term buy and a long-term selling, a short-term buy, a long-term selling. when you identify the overall trend, and it's going to be a long-term buy and a short-term selling when you are identified that the overall trend is what is a buy trend. So I will leave you guys for now. I will leave the video here for now. So let's see how we can okay, we are having Australia JPY already in profit. This trade has also been running for a while now. We had some TP where he took us out there, but it's coming down. It's a downtrend. It's already overbought in the market. So you can see it's already overbought in the market, and this is going to be a short term. At the time I'm making this video, it's going to be a short term sell, because the last time I look at the Australian JPY, Australia is still very stronger than JPY, so it has tendency to push higher. But for now that we are on overbought, we wouldn't want to sell. So you can see it's already sold down. Like I was explaining, if I'm going to look at taking profit on this trade, I'm looking into taking profit at the 200 moving average here, and that is going to be another entry for me to go bullish with the market, because the currency strength here, Australia is still stronger than the JPY. But whatever I'm doing here in terms of selling this market, I'm doing it in reversal based on the fact that Australia has been bullish and it has been overbought in the market, and it has to sell. And selling down coming here is going to have to get into 20% stochastic, and as at that time getting to 20% stochastic, we will have this selling coming into around 93.303. That's going to be a level of TP. So but this faked us out some minutes ago. It fakes us out and bring this bullish and take up I know taking up some liquidity right here before you now starting this bearish impression coming in, bearish pressure and volume coming in. So we say expecting this to sell more. All right, so this is how this trading is done. You can see this trade was negative at certain points. All of them was negative, and so it's all retracing. And this is the reason why you make analysis. You have to trust it and believe in your strategy. All right, so you have to practice this strategy and practice this to identify trend, practice this to take entries and exit. Thank you very much. My name is Greg, the Billion Trader.